This is The Law of Money with me, Vivek Law. Joining me today is Yashish Dahiya, founder of PolicyBazaar.com, who revolutionized the way we buy insurance in this country. We've talked about health insurance earlier. You've explained some of the pieces of the product. And again, because we have so many multiple different products on offer, it's sometimes difficult to understand. It confuses people. For example, we've all been used to Mediclaim, right?
Yes.
Which was about you got hospitalized, you went, presented the bills, and then you hoped that the money would come back to you after 50 questions were asked. We've moved a long way from that era.
Yeah.
Then you have critical illness, as you talked about. Can you tell us what each of them stands for? Nowadays, we also see some health-specific insurance companies, which are only doing health. You have general insurance companies, then you have life insurance companies. So can you give us an overview on what these different kinds of health policies in the system are, and who do I go to for each of them?
Sure. So there is a basic health insurance policy which is called a Mediclaim, or which is the policy that most of the general insurance companies are selling. These are 1-year policies which are by law extendable every year. So you cannot be denied the extension of these policies. You have a coverage. Say you take 5 lakh rupees as a coverage, so up to 5 lakh rupees. Broadly, most of your diseases are covered. Most of these require hospitalization for 24 hours. So you cannot really get paid if you're not hospitalized for 24 hours. Nowadays, some policies have come in which are OPD policies, which also cover you for outpatient activities and surgeries, daycare surgery treatment, etc. Some of them are also covered. But you have to ask what is covered, what's not covered. Everything is not covered in a Mediclaim policy unless you are in hospital for 24 hours. There's a very interesting piece within these Mediclaim policies which one has to explain. These are called the top-up policies. These are very interesting. According to me, if I was to buy a policy, I'd buy a top-up policy.
Okay.
What the top-up policy does is, suppose you're working in a company and your company provides you 2 lakh rupees coverage. You buy a coverage from 2 lakhs onwards.
Okay.
So 2 lakhs to 20 lakhs. The beautiful part is this 2 lakh to 20 lakh will cost you about 10% of the price of a 20 lakh rupee policy. The better part of it is, the day you leave your company, you can get the first 2 lakhs also covered. Of course, the premium will then go up, but you don't have to undertake the premium for that long. For someone like me who may not mind spending 1 lakh rupees or 2 lakh rupees on health insurance, but is really worried if the bill goes to 20 lakhs, I may take a voluntary deduction and hence reduce my cost of insurance to 10% by taking a top-up policy. So top-up policies are good. They're quite a meaningful. Then come these things called critical illness policies. See, there are 34 critical illnesses identified. But that is more, the ones we are aware of as a public are cancer, heart-related, multiple sclerosis, brain. If any of these diseases unfortunately were to happen, the cost shoots up, and the cost is very high. I know of people who've spent tens and tens of lakhs. I recently know a friend whose bill has come to 2 crores.
Budgets get wiped out.
Like one person has just spent 2 crore rupees. I know them, right? Liver transplant went wrong, etc., etc. 2 crore rupees, 9 months in hospital. 2 crores is a big amount for it wipes out people, right? So point is, if you want those kind of things covered, one can take out a critical illness policy or a top-up policy, because it really helps in those situations. But those are the different. Now there is a new theme coming in, which is investment cum health policies. My basic advice to people is, see, it's a complex category. I can try to delve into it and I can give some ideas about it. But keep your investment and your health insurance separate. When you do investment, try to look at your investment returns. Whether it's mutual funds, whether it's ULIPs, whether it's whatever, right? Or a fixed deposit, or whatever you want to do. Do not confuse it. Because the point is, the companies and the distributors are experts at this. Unfortunately, the customer is not the biggest expert at it, at every policy. We also can't go into that level of detail that we explain each policy. Most likely, the complication is going to cost the customer. And it's not done for the customer, it's mostly done for the company's profitability. my point is the balance is not there. Just keep insurance for insurance and investment for investment. It'll work. But there is a certain category of people for whom the investment policies can work. Suppose you cannot get a health insurance policy at all, right? Because you got a sickness, etc. Then some of these policies can get you discounted treatment.
What are these policies called in the market?
So basically, mostly you will find these will be run by the life insurance companies. They would be a form of endowment or ULIP, which will have a component of health insurance instead of life insurance.
I see.
And they would be multi-year policies. They would be multi-year policies, maybe 3-year policies or 5-year policies. Could even be 20-year policies. But they will have a component of investment going on. So usually it will be a much higher premium. And the savings will be used to pay off your own medical bills. There will be a component of health insurance. But for general people, they should avoid these products unless you're in that special need where you can't get basic health insurance.
It's been a pleasure talking to you, Yashish. Thank you very
you.
much for coming on The Law of Money to demystify insurance.
Thank you very much.
We'll keep this conversation going.
Thanks.